Hey, everybody. It is good to be here with you today. It is condors, calendars, and butterflies, and other option strategies too. Advanced options is basically what we're doing here. And we do this each Friday, and just grateful for you. I see some familiar names in the chat. Appreciate chatting with you. Appreciate you being here. And those watching on a recording, we're glad to have you too. Um, there we go. Hey, I'm joined by James Boyd in the chat. Appreciate James. James teaches a bunch of webcasts for us, and including an investing master series. Have you checked that one out? Try that one. That is on Tuesdays at 11 o'clock Eastern time. So make sure you check that out for additional content. You can also follow James and myself on X at Brentmore CS, at James Boyd CS for additional content throughout the week. Now, before we get too far into this and start looking at the markets and some potential, trading opportunities, let's talk about some disclosures here. As options do carry a high level of risk and are not suitable for all investors. And the material today is intended for general informational purposes only and educational purposes. With long options, investors can lose 100% of the funds invested. Short options could be assigned at any time up to expiration, regardless of in the money amount. The paper money software application is provided for educational purposes only. Paper money does not assign short options early, by the way. And let's see. Rolling strategies can entail additional transaction costs. All investing involves risk, including loss of principal. There's no guarantee that execution of a stop order will be at or near the stop price. Past performance is no guarantee of future results. Schwab does not recommend the use of technical analysis as the sole means of investment research. And probability analysis results are theoretical in nature. So we'll look at the current market, look at some different, look at some strategies here. There's a bunch of different strategies we cover in this webcast. I try and mix it up so you get some exposure to various strategies, but, we'll take a look. Let's take a look at the market. Well, hey, look, we're down almost 1.5% on the S&P 500 today. Not a surprise. This is a very news-driven market right now. The market's always driven by news to a certain extent, but right now the news coming out of the Middle East is what's really driving the market. And a lot of it, you could even argue, is defined by like oil prices. I mean, if you look at oil prices lately, on days where oil's going up a bunch, the market's going down, and vice versa, for the most part. So just be aware of that. In fact, what you could do, you could even take oil and pull up a correlation study. Is this one you guys are familiar with? Click on correlation. It's just a study you can add. This is it contrasts it, it compares it to the S&P 500. That's the default. You can change it to whatever you want it to be. But it's a measure between one on the high level, 0 and -1. 0 would mean they're just uncorrelated assets, oil and the market. -1 means they're perfectly negatively correlated. Means when one's going up, the other one's going down. Oil and when I say the market, I mean the S&P 500. And you can see for quite a while, it was just kind of humming along, not that much. But as soon as the war broke out, and this is kind of what's happened, right now, they're very negatively correlated. And so correlations can go up at various times. And what the market is correlated with most closely, often it can change. Do you remember 2-3 years ago when inflation first really hit really high? Maybe it was 4 years ago, I don't know. The correlation between inflation numbers in the market was very significant, just like what we're seeing with oil right now. Now, things will change at some point in the future, but right now that's where we are right now. So anyway, this, by the way, I'm not talking about trading oil here. we're just talking about the price of oil. Okay, so we're not getting anywhere near trading oil. This is just looking at correlation between oil prices and the S&P 500. But if we're looking to trade in the market, there's different routes you can take, different approaches you can take. One, of course, is just to come up with a watch list, but there's a lot of different watch lists you can go that are available on Thinkorswim. So if you go to Thinkorswim software and click over in the left-hand column and go to your watch lists, I can go to, analyst upgrades or downgrades. Those are fine opportunities. I can go to analyst downgrades. Let me just open that up. And you're going to get some stocks. Just be aware, a lot of these stocks, they may or may not be optionable. And if they are, they may not be liquid as well. Same thing with analyst upgrades. That's under the lovers and losers category. And of course, that's fine. You can go to by industry too. And if you go to by industry, you can look, there's energy stocks. And if you want to look at energy, you can go to select all energy, but there's a problem. And the problem is if you just click select all energy, there's a bazillion stocks there. A lot of these aren't going to be optionable at all. A lot of them are going to be like penny stocks and here's a $2 stock. And as you look at these, here's a 50-cent, whatever, you can look at these. And so these aren't going to be appropriate for options trading probably. So you can trade energy stocks. So Kelly in the chat said, hey, well, we can look to trade energy. We can trade energy and not look to trade oil itself. And there's kind of another way of doing that. If you are going to do something like this, you probably want to add another column in, like a market cap column. You can add extra columns in by just clicking on the gear here. You see that little gear? Click on it, go here, and then you can do market cap. And let me just get rid of a couple of these things. Throw that on there. Now I have a market cap column. And what I can do is I can kind of sort here and we can see, oh, this is, you can see ExxonMobil, Chevron, Shell, and go on. You can go and look at some of these that way. And when you get to the really low market cap things, then for options, probably not as appropriate. Okay? So those are all possible ways. I think it was a couple weeks ago, we created a scan for you, a search for bearish stocks. Well, you can do that if you've saved it. If I go to, we did one with bullish stocks, So here's the bullish stocks one. Probably not a shocker, that look at the names, ConocoPhillips, Chevron, Halliburton, Occidental Petroleum, Exxon. Energy, right? It's back to energy for this. And this is largely a technical, just a relative performance type look at the market. So not surprising with bullish options. That's what we have. That was a few weeks ago we did that. And then we also did one, I think it was 2 weeks ago, where we did bearish option scan. And you can come up and it's kind of doing the same thing. And you can go through here and these are screening for more liquid options. The scan, by the way, the bullish option scan, the bearish option scan, the neutral option scan are all in the description of this webcast. Okay? They're all in the description of this webcast, the ones I just showed you. So you can, in the chat, Barbara said you can't filter by low cost. You can filter by the price too. I added a market cap column before. You could just add a mark column. Mark is price, basically. Sort by that and just do it that way. Now, if you create a scan, of course, if you create a scan, you can filter by the option price. And that's what I tried to show you the last few weeks in this webcast. When you do a scan and you save the scan, then it becomes a watch list. You don't have to recreate the scan. I don't want you having to create a lot of scans. It just is not efficient. Spend some time, create a scan, and then save it, and then you can just pull it up like we just did there. We did 3 scans over the last month, I think. Bearish, bullish, and neutral. I've shared them all in the description here for this webcast. And so, yes, you can add, look, stock price, mark, minimum $10 is what we did on that one. This scan I have up there right now. Okay, but here's my point. If I'm looking at these and I find something I like, you can do this. Go, hey, but there we go. Kind of more clearly a downward trend. And if you're a trend trader, by the way, I have a 20 and a 50-day moving average on here. We have a Trading the Trend webcast. That's on Thursdays, 1 o'clock Eastern Time. James Boyd teaches that. Okay? But this is a downtrend we're in on Microsoft, and we can look at this. And the first thing you may consider is, well, what's our implied volatility on this? That's something we look at a lot in this webcast. Implied volatility is kind of through the roof. It's higher than it's been over the last 6 months at least. And of course, a lot of this may depend on what the future holds. I mean, this can go higher. Just because we're at higher than it's been doesn't mean it can't go higher. I don't ever want you to come up with that idea, but there's a decent chance that implied volatility will revert down. And so if I do, say, a long call, let me just go to Analyze tab, and we're on Microsoft, and let's throw in a simulated trade because I want to look at this. And I'm going to go out. Well, let's go to May 1st here. Okay, 35 days. And I'm just going to go kind of at the money, about 360. I said long call, I meant long put, because we're going to be looking kind of more bearish here. So, and Mark looked it up and said it's higher than it's been since it's been higher than it's been for a year, the implied volatility. So if I do this long call and I click on risk profile, long put, excuse me, and click on this risk profile, one of the downsides is number one, with a long put, just a single long put, I have a pretty significant theta, okay? Pretty significant negative theta. I'm losing money day to day, everything else being equal. Okay, it's not a realized loss, but the rate of time decay is affecting it. And that's a substantial amount, $20 or $22 a day. Okay. Also, I have a very high Vega on this, currently about 44. If implied volatilities drop, which I don't know if they're going to, but if they do drop, that can be pretty detrimental to this trade as well if we just do that long call. So something we can do is we can play with it. You can tinker with it. And so let's tinker with it a little bit. How about? Okay. By the way, there's a survey link in the chat. I do appreciate you and your feedback, everybody. You just click on the survey, and you don't have to fill it out right now. You can wait till the end and fill it out until you get a good sampling of this webcast. But let's do this. Let's, in addition to this long call, long put, I keep saying call, I mean puts. In addition to this long put, what if we add in short put? Okay, and that would make it a spread, just a vertical spread. But I can up that short put. Let me just go and get a few more strikes here. I can up the amount of that short put and do 2 contracts even. Let's do a 330 short put. Okay, let me just look right here. And I'm going to do 2 of these. I have 2 330 short puts. I have 1 360 long put. And if I click on the risk profile, that's what this looks like right now. Okay, let me just move this over and center this a little bit more. Now, without the short puts, this is what it looks like. The more the stock goes down, okay, the more the stock goes down, the better you are. That's the nice thing on a long put. If you're bearish and it goes a long ways for you, you could potentially make a lot of money. One of the downsides is this, though. With just a straight long put, if our stock price is here, my break even is down closer to the 340 level there. I need a pretty significant move down in that case. Once I add in these, this is a ratio spread, by the way, a ratio spread. And now we come up with, where's our break even? Now our break even, instead of, it was like, I think 342 or something like that, our break even is up here, closer to like 358 or somewhere in that range. Okay? So we've increased our odds in this case. Furthermore, the amount of potential loss on the high side isn't that much. There's a little bit. Let's just see what it says here. Let me get out of here. And I'm just going to look in this bottom left portion of the page. About $475. Okay, that's a potential loss if the stock goes up. Not if the stock goes down a long ways, long ways. But if the stock goes up, you go 475, that's a lot of money. Well, it's an expensive, this is an expensive stock. And so in the grand scheme, that's not that much compared to what it could be. Compared to, if we just do the long call, what's our loss there? $1,700 if it goes up on the long call. All right. So that's the first thing I wanted to point out, is that side and our break even. Remember, when you're doing a trade, I don't care what kind of trade, you got to know kind of your max gain, your max loss. Where's your break even points? Where do I want the stock to be? Well, I want it to be in this range. Our break even down here at expiration is, what's that, about 304 maybe, something like that. Break even up here is about 355. Does that match with the chart what we want? Look at the chart. We said 304 or so, that's down here. 355, that's here. So clearly this is a bearish trade. It's going to benefit furthermore if our implied volatility drops. Okay, negative vega in this case. Okay, so we'll benefit from the drop in implied volatility. Furthermore, our time decay, our theta, is now positive. It is helping us out. Now, there's a big downside to this as well. And the big downside is that if it goes down, there's a very big potential loss on this. This gets worse and worse. Look, 290, 280, 270, 260. We're looking at a lot of money, losing a lot of money. So we'll want to put an exit here at some point to get us out. But, so if I feel this is just going to fall through the roof from $356 down to $256 or something like that, this would not be the trade for you. You would just want to stick with the long put. Okay? So there we go. And what you may want to do is you may want to look, you can go look longer term, and you could say, well, look, Chris pointed this out. We have some other support down here at some point. That may play into it as well. All right. But which trade is better? I don't know which trade is better. It's up to you. There's just pros and cons to both. On the just long put side, bigger potential gain if the stock goes way down. On this, if we kind of goes down a little bit, but not a ton, we have a much bigger gain. Time decay is on our side, and depending on what implied volatility does, it can work for you or with you. Now, George said, you need to update this. Yeah, I can change this here and pull this up in our let me just set my break even there. And so, it's a bearish trade definitely on that. So that's technically a front ratio spread because we have more short options than we have long options. It's a ratio spread because we have differing number. There's back ratio spreads, there's front ratio spreads, and there you go. Okay, so that's certainly one trade. If you want to do this trade, you can go to trade. You can go to the trade tab. There is a /ratio spread here, and you got to pick your strikes. Let's see, it was 330 and 360. And let me just make sure we got this right. And I messed that up. That should be 2 of those and 1 of these. And we said 360 was our long, and 330 was our short. There we go. Okay. And let's confirm and sit and just look at this. Here's our buying power effect. Someone's asking about that. You can always, you got to just double check on the buying power. This is going to have a much larger effect on your buying power than just doing the long put. If you just do the long put, the effect is just the cost of the put. What was the cost of the put? Well, the cost of that, I'm showing those together. I don't know the exact cost of that put. Let me go. We were doing the 360. It would be about $1,900 or so. So it is significant in that regard. I'm going to just move that over there. I'm going to confirm and send. I'm going to put this. Oh, I don't have groups out there right now, so we put that trade in. It hasn't filled yet. We'll see if it fills. Now, of course, there's other ways of looking for trades. And one way, it's a little bit, you can just kind of pay attention to the news and look at news stories. And the other day I was looking at a stock and we had earnings. And, everybody was kind of a little bit baffled on earnings with Micron because seemingly they had decent earnings on the surface, and the stock sold off quite a bit on it. And we're down here now, kind of potential support. Now, if you're doing a trend trade, would you do a bullish trade on this right now? Probably not. We're not trending up. There we go. We just filled our spread there. But what I can do is you can always, you look, one way to find news on any stock. And by the way, I'd encourage you to just link the news to the chart. I have a 7. You can do whatever number you want as long as they're the same. And that way, when you bring up a stock, it'll automatically bring up the news here for that stock. But this is what I was looking at. You click on it and it brings up the news story, and you can read, and it says, Micron's PE multiple has compressed dramatically as earnings expectations have surged. So actually, earnings expectations weren't bad, and the stock has fallen. It's trading its lowest forward PE ratio among all stocks in the S&P 500. Okay? So, look, does that mean you should buy it? No, that doesn't necessarily mean you should buy it. No. And this is not a recommendation, but it's just an example of ways you can find stocks, ways of coming up with ideas here for these trades on this. Maybe you want to wait for a bounce before you get in, before you were to do this. Maybe you don't want to do it at all. Again, this is just an example trying to show off different trades. But if you were going to go bullish on this, again, what you can do is you can go and you can look, say, we'll go bullish. So I'm going to do a call option in this time. And I'm going to go out 3 weeks, okay, shorter term. So this is not a long-term trade. This is just more of a swing up expectation, not a trend expectation. But with a swing up expectation, one thing I could do is I could just do a long call. Let's go at the money, which is probably going to be, we'll call this as closest to it, 357.50. Let me just jot that down, 357.50. And of course, if I analyze that, probably no surprise, that's what it looks like. Unlimited potential gain on a theoretical gain on a long call. A lot of time decay on this, minus $57 a day. Okay, time decay on that. That's not that's a pretty significant headwind you run into when you're doing this. But the nice thing is, if Micron goes way up, this goes way up. As much as Micron, the stock goes up, this goes up more and more. But we're looking at a limited time frame anyway. We're only going out 3 weeks here. So realistically, you have to ask yourself, how much do you expect it to go up over that time period? Our implied volatility our Vega is positive, so it benefits if implied volatilities go up in that case. But if they collapse, then that would harm us. But let's do the same thing. Let's create a ratio spread out of this. And if you want to just kind of model it, you can take the trade that you just clicked on Analyze before, and you can add some more to it. Go click on Add Simulated Trades. Okay. And I'm going to do some short calls. I'm going to go out of the money on this a little bit. If we go to like, I don't know, 35-ish delta, maybe 36 delta. I'm going to click on that. And I'm going to do 2 of those. And let's just take a look at this. Let's see. Got 2 short calls. Oh, I got the wrong date on there. That is my problem. That should be April 17th. I was going to say that didn't look right. Let's try that. Make sure these are unlocked. There we go. So now for our bullish trade. Where's our stock right now? Our stock right now is 359. Our stock right now is down here. We want a bullish move, but not an excessively bullish move on there. So if we think it's going to go up above the 440 level-ish, that this is not the trade for us. Well, let's look at the chart. So that gives it a pretty good amount of room here between now and 3 weeks from now. It certainly can go higher than that, but that's where it's at right now. In terms of break-evens, yes, our one break-even is around 327. Other break-even is roughly 362, 363, which is about where we're currently at. And just to remind everybody, this is a front ratio. Now, one thing I want to point out is this. Your max gain on these front ratios, and this was true for the Microsoft trade as well, the max gain is where the short strikes are. Okay? Okay? The max gain is where the short strikes are. So in this case, short strikes 395. So remember, that's your target on that. Now, Chris brings up a good question. What about back ratio spreads? Can you do back ratio spreads? You can do back ratio spreads. And a lot of these strategies that we cover in this webcast require higher options approval levels. So not everybody's going to be approved on this. There's more risk on these. In fact, theoretically on this, there's an unlimited risk here on this trade. Why? Well, look, we've got a naked short on this. A lot of you are not going to be approved for that. So even if you are approved, we're going to want to put an exit here on this. I'm going to say, look, if the stock goes above 430, I'm going to get out of this thing. Let's do that, and then we'll talk briefly about a back ratio spread as well. Okay. So let's go here, and let me go to I forgot what strike we picked. We picked okay, looks like we're having a little technical issue. Okay, all right, everybody. Sorry about the little technical glitch there. So here's the trade we're doing, and what we're going to do is we're going to add an exit on this. So we said we were going to exit if it went above 330. So I can do that, and I can just create an first trigger sequential order. I'm going to right click. I'm going to create an opposite order, and I'm going to go to market, good till canceled, click on my gear, and that's funny. Okay, I have a pop-up window somewhere, I can tell. One sec here. Sorry, folks, I'm stuck here. Let me get rid of that and just see if I can get unstuck real quick. Okay, one sec here. Yeah, nothing is happening here. So, folks, I'm going to have to close out of this real quick. And yeah, if you could, yeah, please. Sorry, folks, we're going to take one quick break here, and I'm just going to try and reset this. All right, everybody, sorry for that. I don't know what the deal was, but things just were not cooperating with me there. So let's go. I'm going to throw that trade in one more time just to show you the exit on that. And we were on Micron. We were doing a front ratio spread. And so I'm going to go to the trade tab. I'm going to go to, we were just going out 21 days on that. I was going to do this spread, and we were going 357.50, and this was a call spread, and I think like 395. Get rid of this left-hand column, get our quantities. 357.50 was going to be the long. 395 was going to be the short. We're going to go to first trigger sequential. We're going to create an opposite order. It's not going to let me do that. We're going to try this one more time. And here we go. 357.50 and 400. And I'll show you what it's balking at here. So when I create the opposite order, normally when you do this, if you go to mark it and then make it good till canceled, it's going to say you can't do good till canceled on a market order. Fair enough. But once you click on to add rules on, it will allow you to do that. In this case, it's not allowing me. All right, folks, my computer is completely, my Thinkorswim is completely frozen again. So let me kind of recap what we did, because I'm not going to have you sit through another restart of my Thinkorswim here. There's something going on with it. I'm not sure why it's doing that. But let me just kind of talk about this. When you're doing these trades, you can consider doing these ratio spreads, and it's not a right or wrong thing, but you may see the profit loss profile make sense for you as to where you want it to go, because you may say, realistically, I don't think the stock is going to go way, way, way up or way, way, way down. I think it's going to go up or down a little bit, and my profit loss profile may fit what I'm looking for a little better. Now, we talked about front ratio spreads. There's another type of strategy, which we'll talk about at a future time. I don't have time right now to restart things. With the front ratio spread, we had more short contracts than long contracts. There's another type of ratio spread where you have more long contracts than short contracts. Okay? And so it's not going to entail that unlimited theoretical risk that the front ratio spreads could potentially entail. And so more you will be approved for that. We'll hit that up at a future time. But let me remind you, you're probably looking at this on YouTube right now. I would encourage you to go to the Trader Talk Schwab Coaching Webcast channel on YouTube and subscribe to it. Once you're there, there's different things you can do. You can go to playlists, and there's a variety of different webcasts for different classes. And if you're a beginner, stock investing for beginners. If you're beginning to get into options basics, and so on. So look through these, and you can click on any of these, and any of these are going to have full playlists that you can look at. I'd encourage you to do that. Also, one more thing, you can do me a favor if you like the video. Apologize for the little technical issue I had, but if you like the video, clicking like at the bottom of the screen helps us out. And just one of the beauties of options is there's pros and cons, but one of the nice things is they're pretty versatile. In finding a trade, you just need to a trade that may fit what you want out of your profit, your loss, your break-even points. You just have to be willing to go and play around with it a little bit on the Thinkorswim Analyze tab to see where your profits and losses are there. Appreciate you all for joining me today. Have a wonderful rest of your day. Coming up next, we have market and sector analysis, and have a nice weekend, everybody. Talk to you later. Bye-bye.